Buyers always make mistakes when purchasing a home in Columbia, South Carolina, but here are the 5 most crucial mistakes you must avoid at all costs. I don't care if this is your first time buying a house or the seventh time. These will be crucial for you to avoid when buying a home right now, regardless of the season or even the market. This isn't your Mickey Mouse fluff like getting your pre-qualifications done, get your home inspection stuff. While these are important, this video covers stuff you may not hear from other realtors. Mistake number 1, relying solely on pre-qualification. Imagine this scenario. You walk into a lender's office and they swiftly determine your maximum loan amount based on your gross income. Seems pretty straightforward, right? Not quite. While pre-qualification is a crucial step in home buying, it often overlooks essential factors like your net income and your monthly expenses. Let's break it down further. Your gross income represents the total amount you earn before deductions like taxes and insurance. Lenders typically use a percentage of your gross income to determine your loan eligibility. For example, conventional loans may consider up to 50% of your gross income, while FHA loans may allow up to 56%. However, this approach fails to consider your net income, the amount you take home after deductions. So, what's the solution? Before engaging with lenders or realtors, take a moment to assess your financial situation, calculate your net income, factor in your monthly expenses, and determine a realistic budget for your mortgage payment. Aim to allocate around 25 to 35% of your net income towards monthly housing expenses to ensure financial stability and avoid being house poor. I want to make sure you don't have to choose between getting your car repaired and making your house payment. The second significant mistake many homeowners encounter is closely related to the first one I just shared, failing to adequately prepare financially before engaging with realtors and lenders. While it's true that you'll be informed of the need for a down payment, closing costs, and potentially funds for inspections and appraisals, simply following these directives without deeper financial planning may not serve you optimally. Yes, having your down payment ready is essential. Whether it's an FHA requirement of 3.5%, the conventional range between 3% and 20%, or opting for a cash purchase. Additionally, having savings earmarked for closing costs, typically 2 to 3% of the purchase price, is crucial, especially in a competitive housing market where every penny counts. However, these financial preparations fall under one category, house savings. But 2 other vital categories often get overlooked. First, emergency savings should be a priority. In the past, it might have been acceptable to invest all of your savings into purchasing a home, hoping to recoup the investment within a few years. However, today's volatile market demands a different approach. Emergency savings equivalent to 2 to 12 months worth of expenses provide a safety net for unexpected events like medical emergencies or sudden job loss. Secondly, setting aside additional funds for miscellaneous expenses is prudent. In a competitive market, you might need extra cash to sweeten the deal, whether to cover a shortfall in the appraisal value or to address immediate repairs in a fixer-upper. A buffer of $5,000 to $10,000 for such contingencies ensures you're well prepared for unforeseen circumstances during home buying. By diversifying your savings into 3 categories, house savings, emergency funds, and miscellaneous expenses, you'll be better equipped to navigate the complexities of home buying journey and mitigate potential financial risks. While some lenders may not explicitly require reserves for prequalification, readily available funds provide peace of mind, flexibility, and empowering you to make informed decisions and seize opportunities as they arise. The third significant misstep many prospective homebuyers encounter is the failure to establish clear timelines. But what does this mean? It's all about a realistic understanding of the steps involved in the home buying process and the timeframes associated with each stage. Often individuals decide they're ready to buy a home without fully grasping the intricacies of the journey ahead. They might hastily reach out to a family mentor or friend who is a realtor, assuming they'll take care of everything. However, relying solely on others to guide you through the process can lead to misunderstandings and missed opportunities. To avoid the pitfalls, It's crucial to familiarize yourself with the typical timeline of buying a home. From the moment you decide to pursue homeownership to the closing of a deal, each step comes with its own set of requirements. First, obtaining pre-approval for a mortgage typically only takes a day or two unless there are unusual circumstances. Once you're pre-approved, the exciting search of your dream home begins. While some lucky individuals may find their perfect match in just a few days, for most it can take several weeks or even months to find the right property, especially in a competitive market. And after finding the one and accepting your offer, you enter into your due diligence period, which lasts 10 business days here in our area. This is when you do all of your inspections. Finally, the property officially changes to your hands at closing, which usually takes around 30 days after your contract is accepted here in Columbia. However, it's essential to acknowledge that unexpected delays or challenges can arise. For example, you might discover that your credit scores need a little bit of improvement, delaying the approval process. Or perhaps you're facing a tight deadline to vacate your current residence, necessitating a swift closing. Understanding these potential hurdles and grasping your timeline empowers you to make informed decisions throughout the home buying journey. So whether it's negotiating terms with the sellers or evaluating your properties based on your specific time frame, having this knowledge puts you in the driver's seat. So next time your realtor urges you to make an offer on a property, you'll be equipped to assess whether it aligns with your timeline and your priorities. And if you find yourself being overly selective in your search, you'll have a better understanding of the urgency of your situation and the need to act decisively. In essence, knowing your timeline isn't just about keeping track of dates and deadlines. It's about taking control of your home buying journey and making decisions that align with your goals and your circumstances. Mistake number 4: chasing the golden egg. In a competitive housing market like Columbia, getting caught up in the frenzy of bidding wars and flashy properties is easy. However, chasing the golden egg, the perfect, picture perfect home, can lead to disappointment and overspending. Instead of fixating on the most desirable properties that attract multiple offers and inflated prices, consider exploring alternative options that offer better value and a potential for long term appreciation. Look for properties that may require cosmetic updates or minor repairs but have solid fundamentals and investment potential. By broadening your search criteria and considering a wider range of properties, you'll increase your chances of finding a hidden gem that meets your needs and your budget. Remember, this isn't just about finding the perfect home, it's about finding the perfect home for you. Mistake number 5: buying with short term equity in mind. In today's uncertain real estate market, it's essential to approach home buying as a long term investment rather than a short term profit opportunity. While buying a home within the expectation of selling it for a substantial profit in a few years is tempting, this strategy carries significant risks. The future of the real estate market is unpredictable, and there's no guarantee that property values will continue to appreciate the same rate as they have in the past. Instead of banking on short term equity gains, purchase a home that aligns with your long term financial goals and lifestyle. Consider factors like location, affordability, and potential for future appreciation when evaluating properties. Look for neighborhoods with strong fundamentals, growth potential, and properties that offer flexibility and room for growth. By adopting a long term mindset and prioritizing stability and affordability over short term gains, you'll see yourself up for success in an unpredictable real estate market. Avoiding these common pitfalls and taking a strategic approach to home buying will increase your chances of finding the perfect home and securing your financial future. Remember to prioritize financial stability, flexibility, and long term growth when making decisions. And don't hesitate to seek guidance from experienced professionals. With careful planning and informed decision making, you'll be well on your way to achieving your home ownership goals. I always get calls from people moving to Columbia, Irmo, Lexington, and Lake Murray. So reach out to me if you want to buy in or around the Columbia Midlands or want to know more. My cell phone number is in the description below. If you enjoyed this video, I'm sure you'll love the next one on your screen right now. Thanks for watching, and I'll see you next week.